Smart people are losing money when it comes to the stock market, but exactly why? You would think that the degrees and the books and all of your experience would make you better and you would make more money, except that that ain't the case at all. In fact, a household cat in 2013 beat professional money managers, people who are paid thousands of dollars to beat a cat, you would think, and at least beat the stock market, both things that they failed to do. So why are people not making the best decisions, people who claim to be smart, and how can we avoid these situations, and what are the solutions to these things? Let's go ahead and break it down. The first one is overconfidence. A lot of us feel like, hey, this is the solution. I know this. I've read it. I've studied it, and it is what it is. And this is what we're going to do. Only to find out, you're going to walk off a cliff. And I have seen it in the comment section. I have seen it with myself from time to time. And the stock market can make fools of us all very shortly. All right. For example, I was someone, I think this was at the end of 2022, going to 2023, said Carvana was going to fall off a cliff. And the next 4-5 months, Carvana absolutely took off. And somebody called my card on it. Now, thankfully, here on this channel, I use a lot of very specific words. When I say might, maybe, looks like, probably, and I leave myself some room because I know that while I do have a lot of experience and expertise, and I do, right? I'm not perfect. And I talk about those mistakes, and we will do a video here in the next few days about all the things I was right on and all the things I was wrong on. It helps me to remind myself that I should not be overly confident on every single thing in the world. But overconfidence is one way that smart people fail when it comes to the stock market. The next thing, especially when it comes to people who love to absorb information, is too much noise, too much education, and absorbing just everything under the sun. It is great to learn. It is great to subscribe to this channel, which I am so glad that you went ahead and clicked that button right now. That was your chance to do so. However, when you are absorbing every single thing, you're reading every single timeline, that's not always good, especially if you're acting on every single thing. For example, we all know what happened with all the trade rumors and all the tariffs and all those things earlier this year. But imagine you're trading on all of that stuff and you're making moves, and then the trades get cut and then they get paused. Like, you're going back and forth every single time thinking you are doing the right thing. And in the moment, right in that day, you might, but you're not going to know how the market is going to react to those things. And again, there's a thing as being too informed. Most of the time, you just want to sit still and let the market move. And after you have enough information, which for me, 6 months. I wait 6 months and assess all of the data after half of the year has passed, and then I make a move because I have all of the context necessary to make a more informed decision, as opposed to every week, let me find out what was tweeted. Every single day, let me find out what was going on. That's drinking from a fire hose, and that's not usually going to end up in your favor. It's like being in traffic and trying to swerve, only to find out the lane that you were in starts to move a lot faster. Now, we're going to talk a lot more about the solutions near the end, but just one of those solutions is having a financial planner. Now, notice here, having a financial planner, my job is not to help you to beat the stock market and make the most money possible. That can be what a money manager is for, the people who make these funds, like a Cathie Wood or Warren Buffett. That's their job, right? My job is to help you, right, in your behavior, to say, hey, look, I know that we're real confident in this strategy. Let's take a look at history a little bit. Let's dial it back and make sure that this plan works. Right. So if you want to book a call with me, go to buildingbread.com/call Kev. All right, let's go ahead and keep going. The next one here is the wrong expertise. And this is extremely important. There are tons of people who are very, very good, but only in their field, and they're trying to apply their expertise to something else. For example, you can be great at sales, make $250,000, but you are very good at sales. That is what you do. You might not be an expert in how AI is working. You may not be an expert at rebalancing your portfolio and knowing how tariffs are going to impact certain stocks that you own in your portfolio. you might want to just say, hey, look, let me outsource this and not be overconfident and say, hey, I think the tariff is going to go do this with these tech stocks because that's how I work and that's just going to work for Walmart, so on and so forth. No, you might want to either defer and go with someone else on their expertise. You may want to go and listen to someone else on their expertise, or you may just want to go with the index fund and just keep your hands off of it because you are the expert in your field, not necessarily in this field. This also happens a lot of times with doctors. This also happens a lot of times with engineers where they are extremely brilliant in surgery, extremely brilliant with numbers and things in their field. They may not be great at tax. Look into my life, right? I know the taxation when it comes to investments, but my wife's business taxes and all these other deductions and stuff, that ain't me. And I go to an expert. If I had to do my own complex taxes, because I own a business, my wife owns a business, I've got royalties with my book, like I got a lot of complex stuff going on. I don't know the whole 15,000 page tax code. I go to somebody who does for that one thing. I can do the investing piece, the tax piece. I go and pass that to somebody else, right? I only know the few pages when it comes to stocks, right, in the tax code. And that is how I do it. When it comes to law, that ain't me, right? That ain't me. I go to somebody else when I have legal matters. And that is me understanding what my expertise is and passing it on to other people. When you are very good at that field, not talking about smart people, they're very good at their field, you got to know, like, hey, this one is outside of my range. Let me go get somebody who's very good or listen to someone who's very good and bring them in. Get a book, watch a YouTube channel, whatever it is for that one specific piece. The next one is being greedy. Sometimes we can be very, very greedy in that, hey, I am owning a specific asset. It's made me 400, 500, 600%. And instead of saying, hey, I've made enough, or I've made enough to a point where, hey, I can sell half of it and continue making, but at least I'm taking some off the table, which is what I would, perhaps advise as a financial planner, depending on what your assets are, what your goals are, and everything else. We would look at these things. But in either case, just continue riding it out and not paying attention to it at times. And that greed can end up costing you down the line and you end up losing it all. There are far, far too many people who I feel like rode the wave when it came to Bitcoin, rode the wave when it came to GameStop and even AMC back in 2020, 2021-ish, who in theory, even Dogecoin, throw that in there too, in theory, you should still be rich today. With the gains, I mean, when something takes off by 2,500%, if you put enough in, you should still have enough money today. However, you held on for far too long. You didn't take nothing off the table. You didn't save none of it. You didn't diversify none of it. You was a little greedy. Perhaps, because that wouldn't be you, right? Perhaps some of those people were a bit greedy. But, right, being overconfident, thinking that this was going to go to the moon and never fall off, that is what happens and how smart people tend to lose. And then you have fear before we go into the solutions. You can be very smart about doing the right thing, and then fear sets in. That's an unfortunate emotion versus logic. And those are two things that end up fighting all of the time. I mentioned this in a short on here and on Instagram a while back, but Bitcoin has fallen. I think it was 2017, 2018, where Bitcoin hit whatever milestone it hit at that point in time and then fell 80%. You may have been smart. You may have been right in saying this was the time for me to buy Bitcoin, put however much money you wanted to put into it back then, and then see it drop 80% and be afraid and sell out of it. Now in 2025, going into 2026, you can look back and say, hey, I should have held on. But the reality is there aren't many people on the face of the earth that can sit there and stare an 80% loss in the face and not do anything about it. It is hard for me to do that. There is a way that I can arrange my portfolio to where that level of losses isn't going to impact me as much, but that's easier to say now in 2025 and 2026 than it was in 2017, 2018 when it happened, right? That fear can throw someone off who is very smart from what happens in reality. So what are the solutions to this? Number one, you want to set up rules. This is what Warren Buffett has done. He has rules for what is considered a good value. What are the rules in which I'm going to acquire a stock? What are the rules to say that this stock is affordable? All of that, right? You need to set up whatever rules it is for your type of investing, right? You may be looking to buy a house. What type of neighborhood? What is the price? What is the rate, right? What are you willing to pay and what you're not willing to pay? All those things you need to set up for yourself. Have specific rules. Number two, you got to have a process. I'm very big on processes. One quick tidbit, and I've done an entire video on this, but for me, I have a process by which I'm going to sell a stock and buy a stock. I'm going to do it twice a year, June and December. And that time is coming up real soon. And when I sell, or I decide to sell, there are two reasons as to, or two ways and two reasons as to why I would sell. One, you lost your CEO, you lost your way, you lost your direction. You getting up out of here, out of the portfolio. Or, and really three, when I'm thinking about it, or you are underperforming the S&P 500. The S&P 500 is doing 15%, and you doing 10, or you doing 2, you up out of here. And if you lose the money, you show up out of here, all right? Or the other thing is, if I find something that's doing significantly better than that stock, so the stock is up 10, but I find something like Robinhood up 200, then hey, 10 is good, 12 is good, but I mean 200, I found something better. So I find something better, it's well under the S&P 500, or you lost your CEO or something like that. That's what I sell, right? And it can only happen, unless in case of emergencies, it can only happen at June or December. Those are my rules. Those are my rules. Those are my rules. Those are my processes, right? I got those rules, and the process is I'm doing it on these days, right? I have to have those things in place that get me out of the fear factor, right? What happens? Might be scared. Looks like I'm gonna have to wait till June, right? And these things are written down to prevent me from panicking when chaos hits. It prevented me from selling in 2020. Stock market's still up at the end of the year. Prevented me from selling with the whole tariff thing this year. Stock market so far is still up. We'll see what happens for the end of the year, which, I don't want to say it out loud, but the market is up currently. And then sometimes a planner, a person, whether it is a mentor group, whether it's me or anyone else, can help you to either A, put these rules and plans in place, or just help you to be accountable. Say, hey, look, we said we're going to do X, Y, and Z. Let's make sure we do X, Y, and Z. Okay, like, yeah, I'm promoting myself, right? But also, it can be a Facebook group. Now, is that Facebook group, hey, expertise, all that kind of stuff? Depends. But again, it could be your friends. Like, hey, we're getting together. We are saying, we're all saving. We're all putting $200 a month in our IRA. We're all, like, having that accountability is important, and not panicking. We are all going to stick in this together. We ain't going to be scared of X, Y, and Z. We're all going to make sure we're checking each other's trades, checking each other's investments to make sure we're not overconfident, and we all have different areas of expertise. These are things that you could do together as well. But again, you could also have a reading club. We're all reading, educating each other. That is another option as well. But those are some of the ways that smart people lose money in the stock market, and ways that you can find a solution to them. If you want to learn more about the stock market, how it works, and how you can start investing today, you can check out these videos right here.